First, did you take your eye off the prize? The highly anticipated financial reform bill hit the Senate floor Tuesday just as the media's glare was trained on Times Square and an oil slick was hitting the Gulf Coast. Did you lose track of just what's actually in the financial reform bill? Well, the good news is the Democrats didn't have to concede that much to get the GOP to drop their filibuster. The bad news? There's a self-induced fatal flaw in the bill. It's not entirely too late to have hope, says our next guest. But while we're talking threats to national security, let's not forget the fiscal. Alternate's economic editor Zach Carter is today's opener after this.
When you've got these complex financial instruments, they should be in a clearinghouse, an exchange, like the stock market, where taxpayers aren't on the hook if one party in that situation goes belly up, that the other financial players are the ones who are covering any losses, that everybody knows exactly what's going on. And if we have that kind of transparency, then those things can potentially serve a function. It's also good for the financial sector because it will rebuild trust and people will have confidence that when they're dealing with banks, when they're dealing with these institutions, that they, in fact, are playing it straight above board and they're competing on the basis of who's providing the best services and the best products as opposed to who's got the most creative accounting rules or who's able to concoct the wildest derivatives that may serve no economic function whatsoever.
Well, there you have it. The president talking about why transparency is good for the financial sector and good for us, and why he believes confidence is important. So, should we have any confidence that we're going to get transparency or anything else from the financial reform bill that's being debated at last, finally, in the Senate? Here to bring us up to date, Zach Carter. He's the economics editor for Alternate, and he's also a fellow with the Campaign for America's Future. Zach, welcome to GRITtv.
Good to be here.
So we did many of us get distracted over the last couple of days, but there's an important financial reform bill, the one that was being filibustered last week, actually on the floor of the Senate. And as you've written, there's good news and there's bad. Why don't you start with the good?
Well, I mean, the good news is they didn't really give up a whole lot to Republicans to break the filibuster. There were a couple of concessions here and there, but I really don't think they're meaningful in the broader context of the reform package. The downside is the package overall was already a little bit weak. It had been watered down over the course of a year of negotiations, and as it stands now, I'm not confident that it will actually do much to change the way Wall Street works without some serious toughening up on the Senate floor.
A lot of us got an education last week in those hearings. We got an earful about what's wrong with too big to fail, the need for transparency, as the president mentioned, and the whole problem with a stock market that's betting on the collapse of our economy. Will any of that actually be addressed in this bill, and which parts? How?
Well, only if they make some amendments on the Senate floor. President Obama has talked quite a bit about ending too big to fail with this resolution mechanism, similar to what we have for commercial banks. When an ordinary, boring local bank fails, the FDIC can step in and shut it down safely without wreaking havoc on the economy. You can't do that with complex mega banks. But a resolution mechanism is not really going to end too big to fail. We already know, for instance, when Wachovia went down, it was a fairly straightforward commercial bank, but a huge one. They didn't use the resolution mechanism. They arranged a merger with Wells Fargo that scored $15 billion for Wachovia's investors. So, it's a nice idea. It's a step in the right direction. It's a necessary step, but it's not going to end too big to fail. You've got to break up the banks to do that. There is an amendment authored by Ted Kaufman and Sherrod Brown that would break up the banks. It will be offered. It's not clear whether or not it will come up for a vote, but if that's included in the bill, that's a major reform. Same thing with derivatives and consumer protection. We've got to deal with this crazy derivatives market. It's a multi-trillion-dollar shadow market with no market or regulatory scrutiny. As it stands now, I don't think the derivatives language is strong enough to rein in that market. Same with consumer protection. Everybody saw the subprime abuses. We need an amendment to restore President Obama's original intent to create a strong, independent consumer financial protection agency.
Well, it's amendments that are being batted about right now in the Senate. Which ones do you think have the greatest likelihood of passing, and does any of them address that fatal flaw that you wrote about in Alternate this week? And what is it?
Well, the trouble with the derivatives language is that there's a whole lot of attention given to central clearing and exchange trading. We basically have a shadow market here with no scrutiny whatsoever, either from market players or regulators. And so, yes, it's absolutely crucial. So right now, when two parties want to make a derivatives trade, they just call each other up on the phone or over AOL Instant Messenger and make a trade. There's nobody else who has to verify or sign off on that trade. No one who can verify whether either party can make good on it. So central clearing requires somebody to stand in between these two parties and say, okay, if either one of you guys can't make good on this trade, I will. And that prevents the sort of cascade of defaults that people were worried about when AIG went under earlier this year. Well, I guess 2008. So it's a critical reform. And there's a lot of good language about how to mandate central clearing. The trouble is there's also they cut out a clause that makes it illegal, that would have made it illegal for banks to violate the regulations. So we've got these good regulations on central clearing, but it's not illegal to break the regulations.
Okay, let me get that straight again, Zach, because some of us might think that sounds strange. They have regulations, but don't worry. Go ahead, violate them?
Yes, and what's worse, there's a separate clause that says the trade is still valid. So if you're a say a hedge fund and you get duped by Goldman Sachs into a bad derivatives deal and you want to get out of it, in fact, it turns out it was in violation of the regulations, the trade is still valid. Goldman can still collect on that trade. It's very, very problematic.
So is one of the amendments saying maybe we shouldn't have an exit clause from the rules?
Right. Yes, there will be amendments offered in this respect. This is not the only problem with derivatives either, though. I mean, some people are worried that some of the exemptions for commercial firms like Apple or Boeing are so broad that hedge funds and private equity firms could actually slip in there and keep their trading in the dark as well. And there will be amendments on this. Senator Maria Cantwell's got a very good one. And I think it would be very difficult to vote against this if people actually understand what's at stake. The question is whether it will actually come up for a vote.
All right, Zach, one last question. What is at stake for people on Main Street? We've got about 30 seconds. Maybe your argument will help give others something they can argue with.
Well, remember, the subprime mortgage bubble, this couldn't have happened without derivatives. It's not just that lots of people thought they could make money on subprime loans. It's that Wall Street traders could package these things into loans and make a lot more money off of them. So that really fueled the demand for these lousy loans that nobody ever believed could be profitable. So if you don't rein in the derivatives market, you're letting Wall Street continue to speculate with any aspect of our livelihoods they want. And we've already seen that can be enormously destructive. We really do not want to repeat that again.
You're absolutely right there. Zach, thanks so much for joining us. People can find Zach's writing on this subject and a whole lot more at alternate.org. We'll have links at our website, of course, GRITtv.org. Check it out.